Hello everybody. So in this specific video, we are going to learn about investment. We keep hearing this specific word, right? Investment. An organization invested in one startup, or individually somebody invested in some instrument. Like that, we keep hearing. What is the meaning of investment? As part of this specific video, we are going to learn about what is the definition of investment. What are the different personal investment investments, investment avenues? What are the different personal investment avenues? What are the corporate investments? In what areas usually corporate institutions institutional investments? In what areas they go institutional investments? And what are the different diversification strategies of organizations in order to grow themselves and build the wealth for themselves? Right. So these specific topics we are going to learn as part of this specific video. Right. So to start with, what is the meaning of investment? Investments means putting some money or saving money, anticipating that we get future returns, future better returns in future. That's what is the investment. Investment means putting money or saving money, anticipating that we get better returns in the future time. That's what is the investment. Basically, what are the characteristic of investment? Every investment carries certain risk. Certain risk will be there. There will be some return interest rate or some return value from the investment more than the principal amount. Right. And another nature of investments are the if you are expecting higher return, it carries higher risk as well. The instruments which are giving higher returns carry higher risk. For example, derivatives. Nowadays, Bitcoin also has come. Right. So it varies. Different instruments. What is that instrument you are investing in? Higher, higher returns carrying instruments will carry higher risk as well. Right. So now let's move on and learn about what are the different personal investment avenues. As part of personal investment avenues, what are they? Right. So first of all, to start with, one is savings account in a bank, or savings account, that is also known as SB account. You know it, right? That is a traditional. No, now no, so many with Jandan Yojana, with financial inclusion policy, so many people could open the bank accounts in across the country. More than 35 crore new accounts have been opened with the as part of financial inclusion policy in the country. So many people hold the savings accounts, right? So that is SB account, that is savings account. Another one is RD. What is that? RD means recurring deposit. Recurring deposit means monthly you can invest some money in it for a fixed period, 3 years or 5 years, something like that, and you can get whatever is the principal amount plus interest, some fixed interest bank will give you. It will be added, and some of the principal and interest will be given back to the investor, retail investor. That is another type, that is recurring deposit. And third one is term deposit. Term deposit means usually you will be doing it for 1 year, 2 year, or 5 years sometimes, or more than 5 years also, 10 years also sometimes. Term deposits are possible, right? So for the fixed amount of annual interest rate, based on that, bank will give add the interest to the principal amount and then return it after the maturity of the term, right? There are term deposits also. If you are doing for more than 5 years, there are tax saving term deposits as well. That is another instrument under the personal investments avenues. So another one is what, so far we have seen SB account, savings account, RD and term deposit, right? Next one is mutual funds. Next one is mutual funds. Mutual funds are of different categories. Mutual funds. There are sectoral funds. There are index funds. There are diversified funds. There are ELSS, equity linked savings scheme funds. There are tax saving funds. There are fund of funds in mutual funds. Like that, different types of mutual funds are possible. There are debt funds. There are debt funds. So each instrument, on average return rate will vary for this kind of specific mutual fund. Return rate will vary, and risk also will vary from one fund to the another fund, right? So basically, equity linked mutual funds give higher return rate than the debt oriented mutual funds. For example, sectoral funds. What are will come under sectoral funds? For example, technology based funds, banking industry sector funds, pharmaceutical industry funds, right, infrastructure industry funds, right, like the construction industry funds. Like this, different sectors, these mutual funds will invest in different sectors shares. That is sectoral fund under mutual funds. Another one is diversified fund. A diversified fund, usually they diversify. On average, my observation is the majority of these diversified funds, they will invest in the BFSI sector. Almost 15% to 16%, 20%, or sometimes they invest in the banking and financial services shares. These mutual funds, right, and technology funds, engineering, construction, infrastructure. In all these sectors, they will invest. Those are the diversified funds. Those are the diversified funds. And next comes the ETL, exchange traded funds, ETFs, exchange traded funds. Exchange traded funds are also known as index funds. Index funds means these funds are based on the Sensex index, or Nifty index, or Nasdaq index, or NYSE, Dow Jones Industrial Average, S&P 500 index. Like that, index based funds. These are the index based funds, also exchange traded funds. Exchange traded funds. This is one category of, the moment index is growing, this specific fund also will grow. Right, these are, for long term purpose, 10 years or 15 to 15 20 years, these specific instruments are useful. Right, another one is tax saving funds, also known as ELSS, equity linked saving schemes. So these specific funds are useful for the tax saving purpose. They are also one of the category under the mutual funds, right? So like these mutual funds are of, there are debt funds, which will return rate. These are for short term investments, right? So basically, no, we are learning only the theory point of view, what are all available with respect to the investment purpose, right? From the management point of view, financial management, or financial investment banking point of view, right? So these are about mutual funds, right? Next one is what, shares and debentures. Shares and debentures are also another type of instrument for the personal investments. Shares means different listed companies will be there, or BSE, NSE, or even NYSE, Nasdaq. In these stock exchanges, whichever companies are getting traded, the shares purchasing, right? So shares can be purchased in two different ways. One is IPO, initial public offering, and second one is in the secondary market, in the stock exchange trading, by placing the trade orders, right? Initial public offering is one way. You can get apply for initially when the company announces the issue, open issue. Next one is secondary market. You can purchase in primary market or secondary market, that is shares, right? Shares are also another, one more type is there, that is preferential shares, right? So now come to debentures. Debentures are a kind of debt instrument. Debentures, sometimes convertible debentures are also available. Convertible debentures are also possible. Like this, shares and debentures is one category of instrument for the investment purpose at the retail investors level, right? So next one is, a more risky instrument, that is derivatives. Derivatives and options. It is, what is the derivatives, options, what is that? Basically, you will be betting on, like this specific share price, by this time it will go up or go down, like that you will be betting on with the another investor. And if the transaction goes in favor, you will make a profit. If the transaction goes against your put option or call option, you have to pay the money of the balance, if you are trading derivatives options, right? So these are a little bit higher risk instruments. Higher risk instruments, like this, different instruments carry different risk level, right? And also, there will be different bonds, corporate bonds, corporate deposits will be there. There will be bonds are rated like ratings will be there, crisel ratings will be there, for different bonds, company bonds and deposits, deposit certificate, certificate deposits like that. Next, another one another type of instrument is the government securities, treasury bills. These kind of instruments are also available for long-term investment. Like this, personal investors are having different type of instruments in the market. You have to choose based on your risk level, and what is that you are expecting. Based on that, you have to take a decision. Different type of instruments are available in the market, right? Now let's come back to corporate investments or institutional investors. That means corporates also invest in different instruments. Corporates are institutions. What do they do? Usually they invest in infrastructure, or they invest in projects. They invest in startups, or they invest in mutual funds, or they invest in another company shares. That is also possible. Institutional investors, they invest in another company shares also sometimes. Other one is, the best thing would be invest on people. That is also important, right? Investing on people, that gives long term return. If you are investing on people, right? These kind of things, by giving scholarships, fellowships, awards, that also they do. Corporates, international institutional investors, that is also part of their corporate social responsibility, or they do it as part of their foundations, different organizations, right? Investing on people. Another one is investing on research. That is also important. That is also one of the instrument, one of the investment strategy. Investing on research, developing intellectual property, that is one of the best best approach actually. See, if you take country level, India is investing around 9.9% 0.9% to 1% of the GDP on research. The more you invest on research, the more pipeline it will ensure for your organization. The product pipeline depends on the risk investments you are making. The more investment time and energy you are spending on research, it will ensure your product pipeline. That means your sustainability will be longer. As a business organization, your pipeline will be ensured, because 20% of your revenues as a company will come from the new products. What is that you launched into the new innovation you made into the market every year? 20% from the new products will be coming. That means you should, as a business organization, you should ensure your pipeline. That is possible if you are investing on the research, R&D, research and development, and developing the intellectual property, patents. And one more thing is, best example would be patents, right? See, for example, General Electric, when did they start patenting for their organization? Different patents, 1890 and all. No, late 1800s. General Electric started patenting. No, initially in their farming stages itself, so many thousands of patents they have got, that could make billions of dollars of revenue, and they could establish themselves as a global player. As a global player. That means, if a startup or a company in early stage, if it is going for patenting, its survival will be will be ensured, and long term growth also will be there, revenues also will be there in different ways. You can do different things, licensing you can do, or you can franchising, you can do different things you can do if you have patent, right? So like this, developing, investing on the research, and also intellectual property is one of the investment strategy different corporations they do, right? So now let us see what are the diversification strategies. See, basically diversification strategy is also one of the investment strategy. For example, you have certain products, so licensing your patent to somebody, or exporting the products is first way is to export the product. Next, license it to the somebody in abroad, or in some other markets, licensing your technology. That is also one more revenue generator. Or setting up a giant venture, or setting up a marketing office in another country, or setting up of your own development center in another country, foreign country, in addition to the marketing company, marketing branch. So like this, different strategies can be followed as part of diversification strategies, which will give you growth, and also the as part of investment, it will ensure your long term returns as well, right? So far we have discussed about the investment. For example investments can be, what is that? For example, Honda manufacturing plant invested in Rajasthan. Honda automobile manufacturing plant, they invested in Rajasthan. Similarly, Bangalore metro rail project investment, that is also one of the project investments. Similarly, Asian Development Bank also invested in different projects in Karnataka as well. Asian Development Bank, like this, different investments by corporations, institutions do the investment as well. In addition to the retail investors or the personal investors. So like this, these are only the avenues, or what is my learning, I have put it in this. So just it is not an advice to, or make any decisions. It is only the learning purpose point of view, from financial investment banking point of view. What are all the investments available in the market? That's what I have explained to you. What is that I learned, right? So thank you everybody, thank you. Let's move on.